Hello everyone, welcome to another YouTube video. Now, in this video, I am going to be revealing something from my 2022 mentorship, something that hasn't been leaked because my 2021 and 2022 mentorship has been leaked. And there are a few concepts of mine that is kind of like muscle memory now, uh, that I used to teach in the 2022 mentorship, and I'm going to be giving it to you guys for free because I feel like if you guys want to use my bias prediction, it's better if you know this. Okay. So what I'm going to be teaching you in this video, I want you guys to listen. I want you guys to concentrate, and I want you guys to understand. And I'm going to give you proof in just a second. I want you guys to understand that I am the first one ever to do something like this. I am the first one ever to bring these concepts to life. It's just that I'm not a cloud-hungry idiot. All right. So I'm going to be introducing you to my candlestick repricing principle, which I call the CRP. Okay. Now, this is called the CRP. Okay. I used to call it the candlestick repricing theory, but it's the candlestick repricing principle. All right. This is overpowered as hell. Very, very, very overpowered. And as of the 27th of May, 2024, I realized that I can, view higher time frame candles on the lower time frame on the lower time frame. And you can see I have multiple higher time frame candles on the right. All right. So what a noob, right? So CRP, believe me, again, I'm pretty sure if I haven't shown you the proof, here's the proof right now. Okay. Uh, is my creation, not CRT. You can call it what you want, but I want you to have it on record. I want you to see the date stamp, but I want you to have it on record. I want you to see the date stamp that I am the creator of every single thing that you see online. It's just that I don't have a Twitter presence. That's all. All right. Now, some people might say, bruh, I hate it. I mean, there was a comment like this. I hate it when people say that I created it. Okay, you are correct. I didn't create anything. You know what I did create? I created the usage of such things, of such concepts. I created the usage. No one can claim that they created anything unless it's like super, super new, unless like it's something that no one has ever seen before. Okay. This is going to change your trading. This is going to ensure that you see the market the same way I do, minus the timing aspect, of course, and minus the bias prediction aspect, of course. Okay, because they're like two completely separate things that you can find on my video course and in my one-on-one mentorship. And again, you can access the bias prediction in the link in the description below. Okay, and you will also be able to get the bias prediction for free once you have enrolled in the video course. Okay. Now, what is the candlestick repricing principle? Now, the candlestick repricing principle is a framework that can be used to determine when a candlestick or when a particular higher time frame range or when a particular time of day is going to cause a reversal or a continuation profile. Okay, but the framework that's being given is going to tell you whether you're going to find a continuation or whether you're going to find a reversal profile. Now, what I have just drawn for you right here is extremely, extremely, extremely crucial to your trading. Okay. The candlestick repricing principle is based on how a candle opens and how a candle closes. The opening price is extremely important. Okay, the opening price is extremely important. When you see how price behaves around this opening price, only can you make a decision as to whether price is going to reverse or whether price is going to continue. And there are two very distinct signatures in price action that will tell you whether they are going to reverse or not, or whether we are going to continue or not. Okay. And the question is, how is the CRP used? How is this used? Right? So the CRP is used fractally. Okay, is used fractally with any opening price. Okay, this can be the 1 hour, this can be the 4 hour, this can be the 15-minute, this can be the 6 hour, this can be the daily candle. And you are using the CRP, okay, in line with what characterizes, okay, you're using the CRP in line with what characterizes a continuation or a reversal. Okay, you're using the CRP in line with what characterizes a continuation or a reversal. So then the question is, Sean, what is a continuation? How do you define logically, mechanically, how do you define a continuation? Okay, so let's take a box right here. Okay, and let's take the midpoint over here as the opening price, right? So when we open, okay, when we open and when we start to trend higher, right? When we start to trend higher, price is going to continue higher. But what is the characteristic? What is the specific characteristic that tells me that we are going higher? We are going to continue. Sean, why can't we reverse? Why are we continuing? Okay, we are continuing because a continuation, okay? So a continuation, let's call it the continuation, CRP continuation. Okay, continuation is when price on the 5-minute, when price on the 5-minute does not cross and close through the opening price more than 3 times. Okay, when price on the 5-minute does not cross and close through the opening price more than 3 times. So over here, let's just say, for instance, here is 2 times, broke down. We did not close actually. We opened and we broke down, we closed up, so that's 1 time. And price went up. That's a continuation profile. That's a continuation CRP. Okay. Then what is, right? What characterizes a reversal profile? What characterizes a reversal, a CRP reversal? So a CRP reversal, right? It is, I guess, I hope you guessed it. It is basically this. When price on the M5, so on the 5-minute, yeah, crosses and closes through the opening price more than 3 times. Okay. Now, yes, there is a time frame chaining approach, meaning, Sean, if you say 5-minute, then that applies to every time frame, right? It applies to 1 hour, it applies to the 15-minute, it applies to the 4 hour. Yeah, you are right. There is a certain time frame chain that you must use, and I will tell it to you in a bit. Okay. So the CRP reversal, when this happens, right? When price opens, goes down, closes up, comes back, closes down again, goes up, closes down. Okay. When this happens, you need to know the bias. And if the bias is bullish, price will run the lows and then it will start to trade higher. So that goes to say that goes to show that this CRP is a reversal CRP. It's an accumulation, manipulation, distribution. Okay. SMT divergence must be there. There must be an SMT divergence. Okay. At least with some correlated asset class. It's as simple as this. You have a CRP continuation, not CPR. CR, candlestick repricing principle continuation, and a candlestick repricing principle reversal. Okay. This is how price moves. Only one of 2 ways. Okay. Now, when we take a look at an example, right? So this is gold. So on gold, let's for instance take the opening price of the day. So which is the 6 o'clock opening price, right? How are we going to use this information? Because if you use the 5-minute chart, of course, you can see multiple body closures above and below, right? So when it comes to the daily, you will pair the body closures around the opening price with the M15, H4, M5, H1, M1, okay, M1. And whenever you see a reversal profile, just know that once that SMT is there, once that reversal signature is there, it will reverse. Okay, so when we take a look at the 6 o'clock open, that automatically assuming the 15-minute chart is our reference point. Okay, now on the 15-minute chart, what can we see? We can see that we opened down over here, we opened, went up, we rejected, see, we did not close yet, we went up, and we broke down once, broke down twice, right? And this is a continuation profile. So you can expect that continuation higher, and when the high of the day forms, you will not expect price to make a complete reversal for the low. Okay, you will not expect price to make a complete reversal for the low. That's simple as that, right? So then, if you take a look at another day, for instance, let's say Thursday. So on Thursday, we had the daily open right there. Oh, that's not the daily open. This is the daily open. This one. That's the daily open. And look how price opened, ran higher, and then closed below and then continued down. So that's a CRP continuation. So you know that the direction is down. Price is going to continue lower. Okay, so you're going to look for continuation to the downside. At no point are you looking for a reversal back up. Okay, take another one. So let's delete all of this. This is from our mentorship backtesting session from the weekend. All right, let's take a look at this. So right here, we have the opening price at 6 o'clock, which is there. What happens? Can you see how this is a reversal profile? Look, we broke down, broke up, broke down, broke up. It's a reversal profile. So what am I looking for then? I'm looking for price to hit a key level, have SMT divergence, and then sell off. And once the reversal profile, once the reversal CRP is already there, once it's already set up, then you're going to just look for that continuation down inside of each session. Okay, so this way you are aware of how the daily range will expand. Okay, you are aware of how the daily range will expand. Take a look at this day. Okay. So over here, if we take a look at the opening price, which is this one, what can we see? We can see that, okay, we opened, we closed number 1, close number 2, close number 3, close number 4. All right, and price sells. And now if you have an SMT divergence down here, then you're expecting a full reversal, right? And once that full reversal happens, then anything that extra that happens at the end of the day is just a retracement. But if you are cognizant of the fact that, okay, we formed the high of the week over there, then you can take this sell and you can ride it for the entire weekly range expansion. And that also, if we think about the weekly, right? If you think about the weekly, remember, we use the 15-minute for the daily. So for the weekly, we're using the 1 hour. So if you understood that this is your weekly opening price, Sunday, 6 o'clock, all right? So Sunday, 6 o'clock right here. What happened? We opened, went down, closed up one time. Okay, that's fine. We go up. And then we close down the second time. And then we close up the third time. Okay, then the problem is, okay, shit. This is a reversal profile, but from where is it reversing? Is it going to reverse from here, or is it going to reverse from there? And that is why SMT divergence is very important. Okay, let's check. So here, what do we have? We have got this. We got this. Do we have SMT divergence? Do we? Let's see. Nope. Over here, we don't have SMT divergence. Do we have SMT divergence with this high at any point? Right here. Do we have SMT divergence at this high at any point? Yes, we do. Why am I talking about this side? Because if you're reverse now, we went back up, right? If you're reversing for the week, then we should have SMT divergence with this high. Do we have it? Yes. See that? We do. We do have SMT divergence. So that's a reversal profile for the week, right? It's a reversal profile for the week because once the reversal profile has been determined, then when you get that SMT divergence, all you have to do is just follow through. Again, all you have to do is just follow through. Let's take another example. Let's take last week. Last week here, I guess this is the opening price. This is the opening price. All right. So inside of last week, we opened. Let's find exactly where the opening price is. Right there. Okay. So we opened, right? We broke up, right? Broke up. We closed down for the first time. So then you're thinking, okay, you know what? It's going to be a continuation profile, right? And then you take sales, you take sales, you take sales until it goes up. Again, remember you're playing the daily profile as well. So you're playing the daily CRP as well. So that's fine. So it's going up and now it's closing. Closed up over here, closed up over here, closed down over here. So that's telling you, okay, this is a reversal profile. So this reversal CRP, I need to find an SMT divergence at any point over here. Tell me that, yes, you know what? We are going higher. Preferably here because this is where most of the crosses happen, right? So the objective three or more. So we have this, that. We have SMT divergence. So that's telling me, okay, the remainder of the week is going to expand bullish, as indeed. All right. So that is vital for you to understand. Extremely important. Now, as day traders, we don't really worry about what the week is going to do. As scalpers, we don't worry about what the week is going to do. But if you are someone that wants to take advantage of the weekly expansion, this is how you're going to do it. And on this particular last week, basically, you were of the understanding that, yes, we are going to have a CRP continuation, right? So, for instance, let's say you're not going to take any sell until, of course, price comes back into this range, right? So when price comes back in this range, it closes, it needs to come above the opening price right there. So it closes minutely over here and then it closes back up. So granted, you are going to take a loss over here. I'm sure, 100% you're going to take a loss. Unless the buyer's prediction said bullish or buying, right? But apart from that, if you just were to follow the opening price alone, the CRP alone, you're going to take a loss with the sell. But if you understand the buyer's prediction, you know that we are going to go higher. Okay. And by that time, by the time all this happens, you will see that we are actually having a reversal profile and price is going to smash up because we formed a low. This is just that retracement with the news to cause higher price. All right. Now, why, right? Why is CRP something that I used to teach back in 2022? Why is it? Why did I start teaching that? Right? Why? Well, CRP, okay, it's the height of internalizing price delivery. Okay. And the only missing component that that goes with what I'm talking to you guys about is time and bias. Now, both your timing and your bias, you can get from the video course, and you can learn how to do the bias prediction yourself in the one-on-one mentorship. Link is in the description below. And if you want to join the one-on-one mentorship, you have to send me a message. I'll see if we are a good fit, and we can go ahead. All right. And also the link in the bias, the link for the bias prediction is also in the description below, so you can go and check it out. All right. Now, one other important factor that goes into CRP and which goes into your daily trading anyway is what I call the two time frame rejection. I'm sure I covered this in one of the earlier videos. So, two time frame rejection is when you want to see price forming or attempt to form, or while it's in the process of forming, an external range demarker. Okay, an external range demarker. So an external range demarker is when you have basically like a doji candle. All right. Now what you can see here, I have multiple time frames over here. This is the what's this time frame? 15-minute candle, 30 minute. This is 1 hour. Hold up. Hold up. This is this is 30-minute candle, 1 hour candle, 4 hour candle, 6 hour candle. Okay. So when I watch for that rejection, I know that price is going to, make a nice move in this case to the downside, because our Asian bias was bearish. And if you look at the Asian open, which is 6 o'clock, and compare that with the 5-minute opening price, because we're looking at the day as well. So we're looking at both the day and the session. For the session, we closed down, we closed up, we closed down. But the session bias is bearish. So I'm looking for price to sell off. So this is a reversal profile in which I'm looking for price to sell off. Simple. Okay. Coming back here to show you how the candles look like at this point, for you to understand the two time frame rejection. Can you see the 4 hour? That's my 6 hour. Okay, yeah, 6 hours there. The 4 hour, can you see how it's beginning to reject? And we open and we just suddenly started dumping, right? You see that? So that's good for me. Like, I like that. It's advantageous for me because the 4 hours we came down and all the other time frames are just simply trading lower. Okay. And what I would like to see is for the 1 hour or 30-minute to also show me this rejection. So 1 hour, everything is going well. And actually, that's pretty much it, because that's where we are right now. So everything else right now is suggesting bearishness. And because the session is done, now it's the London session. This 6 hour candle right here, it will represent something else. 4 hour candle over here will do something else. And this 4 hour candle is open is at what time? This one is at 10 o'clock, I think. Yeah, 10 o'clock. So the next 4 hour candle open will be in half an hour. Okay. And because you already see that this 4 hour is a rejection, it's going to be all the more easy for us to see a initial London sell-off prior to anything else. Right? Maybe this will just be closed as a scalp if it doesn't make its way all the way down here. Right? Okay. So if you guys have any questions at all regarding this, this is your foundation, right? You can backtest it. You can use it with my bias prediction algorithm, and I'm sure you'll be able to get it close to 100% strike rate. And your greed is what's going to hold you back, as it holds me back sometimes as well. But that's the nature of trading. If we were able to get hold of our emotions, every one of us would be millionaires. All right. So with that said, I'll see you guys in the next one, preferably with some examples of live trades. Everything that you need from me is down in the description below. Good luck and good trading. Bye-bye.